Good evening, everyone. Time for another silver update. This is the weekly chart of gold provided by netdania.com. You can click on the link below. Now, I've drawn three lines here. These are not trend lines. These are actually lines that intersect with the low in the MACD in the various points of this bull market. You can see that we are intersecting with the 2007 low, 2008 low, and then the current 2012 low. The line that I've drawn here is one that links up with the high price that was reached, and you can see that the high price reached on the second line after the low was significantly higher than the first line, nearly twice as far as price, but it depends if you calculate it by a incremental chart or whether you're going by the price alone. But you can see the last trend line here that if the pattern continues, you can see it scrolls off the chart. You can imagine where this has to go and where the price has to go if the same pattern is followed, to where we cross over in price and then match up with the line. I don't know what that price is going to be. That price may be as high as $5,000 or $6,000. I don't know what that price is going to be. But you can see that we're clearly following the same sort of thing if this pattern continues. And I was actually going to start with a chart of a stock. I was going to do Green Mountain Coffee Roasters and talk about the scams that are involved in the stock market. But I had to abandon that story because of a user question that ended up being an endless rabbit hole. So I want to take you down that rabbit hole instead. Now, this is a question on the forum, and it's from High and Wired, and he says, $60 billion gold scam. Hey, Brother John, thank you for all you do. I'd like to ask you what you think of this story. And he links a story on Forbes. So we'll go ahead and click that in a new window just so you can see it. This is a story that Forbes reported on the 20th. Focus: China gold scam could translate into higher demand. While this has not been widely reported in the Western media, and boy is that an understatement, we're going to look at that in a second here, news broke this week of a massive illegal gold futures trading scam in China. Not only does it underscore the growing hunger for gold among the newly minted Chinese middle class, but it also hits home the rationale for owning physical gold, according to one U.S.-based asset manager. Over 5,000 investors were bilked of 380 billion yuan, or $59.62 billion, in a scheme involving Loco London gold since 2008, according to a report in China Daily. While details are unclear as to how the scam worked, the implications could be bullish for gold in a number of ways. Perhaps gold prices could be at even higher levels than they are right now if this money had been properly invested. Quote, that is obviously a very significant amount. This is an enormous scam, said Adrian Day, president of Adrian Day Asset Management. Looking ahead, Day noted, it might make Chinese investors turn toward the physical rather than esoteric contracts. Quote, I don't think it will make the Chinese people not buy gold. It will make them want to buy physical gold and keep it, Day said. The newly minted Chinese middle class has a natural cultural affinity towards gold. It is a cultural distinction that many Westerners underestimate and perhaps don't appreciate. Looking at the most recent physical demand information available, gold demand in China skyrocketed to record levels in the first quarter of 2012, according to a report from the World Gold Council. Additionally, China is expected to overtake India as the largest market for gold this year. Consumer demand in China surged 10% to hit a new quarterly high of 255 tons, according to the World Gold Council's demand trends first quarter 2012 report. Additionally, Chinese consumers were active buyers of gold jewelry in the first quarter, buying 156 tons, accounting for 30% of global jewelry demand, according to the World Gold Council. That is an 8% year-over-year increase Rising Chinese income levels are a key factor seen. Chinese gold demand is on track to expand by 7% to 870 tons this year. On its current path, China will likely surpass India as the single largest market for gold in 2012, said Marcus Grubb, managing director at the World Gold Council. Quote, gold demand in China has grown consistently over the past several years, driven by the liberalization of the Chinese gold investment market, the introduction of innovative gold savings accounts, and a strong interest from Chinese citizens in buying gold to preserve wealth, the World Gold Council, Grubb added. While physical demand has dropped off in the U.S. in early 2012, some gold watchers point to higher price levels seen in the first quarter as a factor depressing coin demand. After all, August gold futures hit a peak of $17.97 in February this year. Savvy traders don't like to chase. Savvy traders like to buy on dips. Looking ahead, Day highlights factors which will keep Chinese citizens headed to the gold dealer. Quote, we think the Chinese yuan is undervalued, but for the Chinese, their currency isn't rising. They have negative interest rates in a bank. They don't really trust banks anyways. While the summer doldrums may have hit the gold market, and as gold lumbers along in fairly narrow ranges, gold is over $200 per ounce lower than the first quarter. Quote, I'm using these dips to buy more, concluded Day. While there are many uncertainties in financial markets and trading, probably one certainty that investors can count on is there will be another crisis and yet another. The human condition of greed and fear seems to propel an ongoing cycle. Students of market history are well aware of the tulip bubble in the 1600s, South Sea Company bubble in the 1700s. More recently, individual investors around the globe have lived through a number of financial crises. U.S. Technology.com bubble burst in the equity market, U.S. real estate collapse, a collapse of Lehman Brothers, the global financial crisis 2008, European sovereign debt crisis, which is still unfolding. Unfortunately, scams, frauds, and bubbles are unlikely to go away. Many investors feel that physical ownership of gold is one way to protect and preserve their assets. So that's the Forbes article. Now, what's interesting about this is the first I've heard of this, and I decided to do a little bit of research. So the first thing I wanted to do is to do a Google search of both the news. You can see we're on the news search link, and then as well as the general Google search. And what is fascinating about this news search for Loco London is that you only get 6 results. Now, that is going to give you pause. First of all, is this Loco London even a real thing? That's going to be the first question you're going to ask. How could it possibly be that something as big as this, if you remember the story, the report is that this is a scam of $59.62 billion. That's larger than the Madoff scandal. And yet, the news reports of this story only are 6 results. Now you have the China Daily article, and you have the Forbes article citing the China Daily article. You have a Forex Pros article which cites the same information, and then you have a couple of stories, one from Vietnam, one from CPI Financial, and one from China. Now let's go to this China article real quick here, because what I did was I went and clicked on the article and took the Chinese and went into Google Translate and translated this Chinese into English. This is a story from the Chinese paper, whatever that is. London Gold, although high-risk investment in Hong Kong, is not subject to regulation of law. Any financial institution that can be traded freely, gold and silver exchange in Hong Kong, only trading platform rather than a statutory body, the right disposition of suspected fraudulent brokers due to regulatory gray areas, and thus derive numerous cases of deception involving the retired elderly and housewives, the fraudsters using legal loopholes to mislead buyers to sign a contract agreement the authorized intermediary or broker solely responsible for the transaction. The company can be right and proper to illegal means to increase the earned commission modus operandi, including the false price and deliberate attempt to increase the number of trading. The scam was discovered in the past. There will be victims of the public in just 9 trading days. The broker 74 times trading, even though deceived numerous cases, a huge amount of loss, but because of legal loopholes to law enforcement agencies, it is difficult to take action. The public in vain to give hard-earned money to swindlers. One of the 4 global gold market, the data show in 1974, the government lifted the entry ban of Loco London gold. International gold dealers then regarded Hong Kong as the secondary market of the London gold trading. The following year, the Hong Kong market, a larger scale, has now become one of the 4 global gold market. London settlement, meaning loco or local, sounding similar to be mistaken for the local London gold. Local London gold are quoted in US dollars, bid-ask spread under normal circumstances, which is $0.5, but in special circumstances, such as the 9/11 event, may be expanded to more than $1 local London gold contract ounce. Each contract is for 100 ounces, the fineness of 995. So that's a Chinese story. Now, that's only one of 6 news stories that exist in the world for this term, Loco London. Now, I also did a search for Loco London on Google based on, well, we'll have to go back to that story. But if you use Google and change your Loco London to, Loco London to the general search, you'll find that you come up with a number of stories here, and we'll do that real quick here on the web. And you can see that when you do a Loco London search, you find that it actually references the 1st, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, 9th stories are actually LBMA stories. I've got one of those LBMA stories here, and this is from the Telegraph. Well, I'm sorry, that's the wrong one. I want to go to this PDF, and this is from the LBMA, and this is from Peter Smith, Executive Director of JP Morgan Chase. Gold and silver clearing Loco London through the central hub developed by London Precious Metals Clearing Limited. The LBMA has requested that I provide, so this is a LBMA request, some additional clarity on the methodology employed to develop the monthly clearing statistics. Since my original article about London bullion clearing for The Alchemist, issue 6, written a distant 13 years ago, much has changed, but much has remained the same. For example, I said back then that not everyone would be familiar with what was behind the phrase Loco London, or its significance in comparison to the volume of bullion business worldwide. It was a phrase added routinely at the conclusion of a bullion transaction, or used by commentators when analyzing the importance of the London bullion markets. The then reality of London being the global clearing center for OTC traded gold and silver remains as true today as ever, and perhaps even more so with the rising establishment and growth of several new exchange-traded bullion markets and platforms around the globe impacting London OTC bullion trading volumes. In fact, OTC Loco London is usually the preferred market to use when squaring off any exchange positions, and the general level of bullion cleared Loco London remains very robust. To date, in 2009, that's the date that this was written, the average value of gold and silver cleared in it is in excess of $20 billion each business day. See graph, and you can see here's your graph. The blue is gold and the gray is silver. Or for detailed bullion clearing statistics, please visit LBMA website, which publishes the data each month under market statistics. On the other hand, back in 1996, there were 8 clearing members, but with some painful realignment of priorities, 2 members have since decided to exit the Loco London gold and silver clearing business. Today, the remaining 6 bullion clearers, each a major bank, are the joint shareholders who created the London Precious Metals Clearing Limited, LPMCL, which owns and runs the central clearing system for daily settlement of gold and silver transfers. These 6 members are Barclays, Deutsche Bank, HSBC, JP Morgan, the Bank of Nova Scotia, and UBS AG. 13 years ago, the bullion clearers were exchanging transfers between themselves by telephone instructions. Sound familiar? A situation that was causing considerable problems in the control and audit of departments within those banks. Sound a lot like LIBOR, doesn't it? Because of those concerns, the clearers realized that only sensible and secure solution was to develop a central clearing hub where transfer instructions could be uploaded and matched. The result in the establishment of LPMCL in April 2001. For more detailed information regarding LPMCL, please visit its website, www.lpcml.com. The 6 bullion clearers provide the LBMA with figures for amounts cleared each month, taking 3 measures for each of gold and silver: volume, value, and number of transactions. So I'll link that. You can read that on the link, but I'm going to jump over real quick here to the issue of the Chinese takeover of the London Metals Exchange. Now that's the LME. So, well, I'm not finding that link here. This is the story from the Telegraph of the fact that Hong Kong wins the race to buy the LME. Now the LME and the LBMA, these are 2 different organizations. The LME is actually the London Metals Exchange. This is the exchange that deals with the base metals, the zinc, the copper, etc. And I'll read this. The HKEX, which has the Chinese government as its largest shareholder, beat off competition from the U.S.-listed ICE, Intercontinental Exchange, in a closely fought battle. The takeover will provide a significant boost to the LME's plans to expand in China if the deal is completed during the 4th quarter of the year as anticipated. However, fears have been raised that placing the entity that sets prices for industrial metals, so that's the LME, globally in the hands of the biggest consumer of industrial metals globally may not be a sensible move for the rest of the world. The Chinese government chooses the chairman and chief executive of the Hong Kong Exchanges and Clearing as its largest shareholder. Some analysts have also expressed concerns that the HKEX may be overpaying for the LME. Why would they do that? So, very strange and interesting news coming down the pike here. The first thing is that when you do Loco London and you do news on Google search for news, you find out that you only have 6 stories. One is in Chinese, one is in Vietnamese, one is quoting an above story, so you really only have 3 stories, one from China Daily, one from the LBMA, and one from Forbes. So this is a $60 billion scam, and it was apparently centered in London, and this has to do with the Chinese taking over control, because that's what the LME story and this story apparently indicate, that the Chinese are going to be taking over control of the London trading of precious metals. So this is a huge story. I've done the same cross references on Bing. The stories just aren't there. The links aren't there. Just the fact that this term Loco London only brings up 6 results under news and under the general web. Okay, you have 271,000 results, so this is a legitimate story. The LBMA has a Loco London fix. This is not something that was made up, but this is news that's not being covered. What does it mean? I don't know. It's just a story I found today because a reader sent it to me. So something is happening in London. The Chinese apparently are involved. This seems to confirm what Jim Willey has reported, that the Chinese are taking over the trading of precious metals. They've not only established their own exchanges in Asia, but they're beginning to take over the corrupt exchanges in London. What does this mean? Well, I think ultimately it means that we're looking at the twilight of the existence of the British Empire's control, the Anglo-American Empire's control of the exchange of precious metals, and we're seeing that move to the east. It's happening very rapidly, and it's not covered in the Western press. And very, very soon, I think we're going to see a gold and silver-backed Asian currency, and that's going to strike the death knell of the dollar. And of course, the only people that are going to benefit or be protected from this coming dramatic change are the physical holders of the precious metals, specifically silver and gold stackers. And we'll talk to you next time.